welcome back to this week's market update. Today is November 11th, 2024, Veterans Day. So happy Veterans Day to all who have served. And with that, we will jump right into this week's market update. Markets had a very strong week with US stocks reaching new all-time highs as investors reacted positively to the very clear outcome of the US presidential election announced early Wednesday morning last week. The Fed also cut rates by 25 basis points on Thursday, adding to the positive fuel last week. By close on November 7th, on Friday, we saw the Nasdaq Composite up 6.1%, followed by the Dow Jones Industrial Average up 5.25%, followed by the S&P 500 up just a little bit less than 5% in the week, and then even the Barclays Aggregate Bond Index up 0.4% on the week. Heading into last week's market news, we are not a political organization, although it is very important to look at the largest market drivers of what ultimately drives market conditions. We have interest rates, inflation, the Fed, corporate earnings, and geopolitical events. And last week was definitely a big week for geopolitical events in terms of the US presidential election. Early morning on Wednesday last week, former President Donald Trump was declared president-elect for the second time following his 2016 win after flipping several key swing states. Largely due to the speed of the results, U.S. stocks rallied and the VIX dropped sharply Wednesday, as many had previously held concerns that the results could have taken days longer to call. So with that, it was a very big week for the election. Just things we want to be aware of as we take a look at the main market drivers and how that could impact all of these other things, how it could impact corporate earnings, inflation, interest rates, the Fed, all of these sorts of things tie together, but it was certainly a big week for geopolitical events last week with the election. If the election excitement was not enough for you, we also had a Federal Reserve meeting on Thursday, the day after the election was called, and that's when the Fed announced another 25 basis point rate cut, bringing the target range of the federal funds rate to 4.5 to 4.75%. At the press conference, reporters questioned Federal Reserve Chair Jerome Powell about the central bank's independence in light of President-elect Donald Trump's past comments, suggesting that the president may need more control over interest rates. Powell responded briefly but firmly, emphasizing the Fed's apolitical stance, and when asked if the president could fire or demote him, Powell replied, "Not permitted under law." He is expected to remain as the Federal Reserve Chair through 2026, when the president will be able to select a new chair from the sitting Federal Reserve governors with the approval of the Senate. So, despite some political comments from Powell, or the lack of political comments from Jerome Powell during the press conference, it came largely as expected throughout the November Fed meeting with the 25 basis point rate cut. Now, looking ahead to the December meeting, what are the expectations? Well, previously it was pretty certain that we would see another 25 basis point rate cut, but since then, markets have backed off quite a bit, now projecting about a third chance that there will be no further rate cuts in 2024, and about 2/3 chance that there will be another 25 basis point rate cut by year end. Moving along from the election and Federal Reserve news, we also had the ISM Services Index come out, very bullish, higher than expected at 56%, up from September's 54.9%, and it was the highest reading since July of 2022, also marking the 50th month of expansion in the past 53 months. 14 out of 16 of the service industries reported growth, with the only two not reporting growth were other services and management of companies and support services as the two sectors that saw declines. Service businesses also reported impacts from recent union strikes and hurricanes. Companies indicated that union port strikes had a limited impact on business and supply chains. However, Hurricane Helene caused significant disruptions affecting many businesses. For example, one IV production plant that accounts for 60% of the country's supply of IV bag fluid faced significant damage in North Carolina. So that could be an issue for some medical facilities. Overall, though, we did see a lot of positivity in October's ISM Services Index, suggesting that the U.S. service sector remains on stable footing. Last but not least, we also got the Consumer Sentiment Index from the University of Michigan for the month of November. We saw sentiment rise 19.1% from a year ago, up 3.5% in the month to its highest level in 6 months. On the other hand, though, current economic conditions showed a slight decline, falling 5.7% from the previous year and down 0.8% from October. On the other hand, consumer expectations were one of the primary drivers of this increase in consumer sentiment right here, as expectations surged by 38.2% in the year and 5.9% in the month of November. So, very interesting here. It'll be interesting to see how this changes, if it's political related or if it is consumers genuinely feeling better about the economy and real conditions. Thank you so much for tuning in to this week's market update. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.